here again with a new topic, that is capital and revenue. In this topic, we will see about capital expenditure, revenue expenditure, capital receipts, and revenue receipts. There's a lot of confusion between these 4 points. So today we will see what does actually these 4 means, so that the confusion of the students can be removed. So now let us begin with the meaning of capital. See, it is that part of wealth which is used for further production, and thus capital consists of all current assets and fixed assets. So basically it is that part of the wealth of the business which is used for the further production. And for doing the further production or carrying out the day-to-day activities of the business, one needs capital. And your capital consists of current assets and your fixed assets. Not only your building, plant and machinery are the assets of the company or the capital of the company, but your cash in hand, cash in bank, these all things are considered as your capital of the business. And capital can be classified into 3 types. First one is your fixed capital. So the amount invested in acquiring fixed assets is called fixed capital. So whatever the amount which is invested in acquiring fixed assets like plant and machinery, building, land, they are called as fixed capital. Okay. Now next comes current floating capital. Assets purchased with the intention of sales like stock and investments are called as floating capital. So the assets which are purchased by the business for the intention of sale, that you are purchasing these assets, for example your stock and investment, they are purchased with the sole aim of selling them. So they are termed as your current floating capital. Next comes your working capital. The part of capital available with the firm for day-to-day working of the business is known as working capital. So whatever the capital which is available by the business or the firm for carrying out the day-to-day working of the business is known as working capital. And working capital is calculated by the way of working capital equals to current assets minus current liabilities. So this is what is meant by your capital. Next comes your revenue. Revenue in accounting means the amount realized or receivable from the sale of goods. So whatever the amount or whatever the money were received by the selling of your goods and services is termed as revenue. And these activities are regular in nature. Okay, so that is for this. If you see this meaning, then your amount received from sale of assets or borrowing loan is not considered as revenue, because revenue in accounting means what? The amount which is received by the business from the sale of goods and services, the activities which are regular in nature, and it is concerned with the day-to-day affairs of the business. So that is why revenue is called as amount realized or receivable from the sale of goods. Now revenue is different from income, because income is calculated by revenue minus expense, then that gives you income, but revenue is a different thing. Okay, so this is what your capital and revenue means. Now we will see the expenditure which is done on the fixed assets can be classified into 2, that is capital expenditure and revenue expenditure. So let us see basically your capital expenditure means what. See, capital expenditure is money spent on the purchase of fixed assets for use in the business and not for immediate resale, or on the permanent improvement or addition to or extension of an existing asset with a view to increase the earning capacity of the business enterprise. Basically, whatever the expenditure or the money is spent on the purchase of your fixed asset for the use in the business is termed as capital expenditure. Expenditure done for acquiring the fixed assets for the use in the business is termed as your capital expenditure. They are non-recurring in nature and the benefits derived over several accounting periods. Once you have purchased these fixed assets, their benefit is derived over several accounting periods. And fixed assets are not like that you will purchase in every year. Once they are purchased, their benefit is derived over several accounting periods. That is why they are non-recurring in nature. They are not regular in nature, it means. And it may include purchase cost, installation cost, upgradation cost, and replacement cost. So this is what your capital expenditure means. Next comes your revenue expenditure. It is the money spent on materials and services which are consumed by business enterprise in carrying out normal business activities and maintenance of fixed assets. The benefit of such expenditure is exhausted in the accounting period itself. So whatever the money is spent on acquiring the plants and materials and services which are consumed by the business enterprise in the accounting period itself to carry out the normal business activities of the business is termed as your revenue expenditure. जो भी आप खर्चा करते हो मटेरियल या सर्विसेज प्रोवाइड करने में और जो कि बिजनेस के एक्टिविटीज़ को डे टू डे एक्टिविटीज़ को आप जो कैरी आउट करते हो उसमें जो खर्च करते हो उस मटेरियल और सर्विसेज पे उसको हम रेवेन्यू एक्सपेंडिचर बोलते हैं. दे आर रेगुलर इन नेचर और जो भी बेनिफिट होता है जो भी एक्सपेंडिचर हम खर्च करते हैं वो उसी अकाउंटिंग पीरियड में इंक्लूड होता है. गेटिंग इट. कैपिटल एक्सपेंडिचर क्या होता है? एक बार आपने फिक्स एसेट्स पे खर्चे किए तो आपको उसका बेनिफिट पूरे बहुत सालों तक आप उसका बेनिफिट डिराइव कर सकते हो. बट रेवेन्यू एक्सपेंडिचर में ऐसा नहीं है. जो भी खर्चा जो भी मनी आप स्पेंड करते हो मटेरियल सर्विसेज में दे आर कंज्यूम्ड इन दी सेम अकाउंटिंग पीरियड इटसेल्फ. दैट इज वाई दे आर रेवेन्यू एक्सपेंडिचर बिकॉज दे आर कंसर्न विद दी डे टू डे एक्टिविटीज़ ऑफ द बिजनेस और नॉर्मल बिजनेस एक्टिविटीज से ये कंसिडर किया जाता है. इसका एग्जाम्पल है कॉस्ट ऑफ फिनिश गुड्स और एस्टेब्लिशमेंट कॉस्ट और एक्सेट्रा. Comprise of repair cost, maintenance charges and renewable expenses, etc. Revenue costs do not form part of the fixed asset cost. They are expensed in the income statement in the period in which they are incurred. So your revenue cost basically comprises of your repair cost, maintenance charges, renewable expenses done to the fixed assets. Okay, and these revenue costs do not form the part of fixed asset cost. Okay. Actually, they are expensed in the income statement. They are shown as an expense in the income statement in the period which they occurred. So this is all about your revenue expenditure. Now let us see the deferred revenue expenditure. What does deferred revenue expenditure means? See, they are certain expenditure which are primarily revenue in nature, but the benefit from which is not consumed or exhausted in the year in which the expenditure is incurred. So these expenditure are basically primarily revenue in nature, but the benefit which is derived is not consumed or exhausted in the period in the accounting year itself. For example, the expenditure incurred in the advertisement campaign to launch a new product. Basically, whenever you launch a new product, it is not like that you are advertising it for the one year only or one accounting year only. So to establish a product in the market, we have to advertise the product heavily for many years. So basically, if you see, the advertisement expenses are basically primary in nature because the advertisement is done by the company on the daily basis of its products and services. But when you are advertising a new product, it does not considered under the 1 year only. You do the advertisement expenses, you incur the expenditure for advertising a new product till the product has its own market. So basically its benefit is not constrained in one accounting year and it is not consumed or exhausted in the particular accounting year. That is why such expenditure are given the another heading, that is deferred revenue expenditure. So this was your deferred revenue expenditure. Now let us see capital receipts. See, an amount received in the form of capital from the owner and as loan from outsider is known as capital receipts. So basically your capital receipts are what? These are the capital which you receive from your owner, the amount which is invested by the owner himself, or you as a loan from the outsiders like bank or from the public. So these are what your capital receipts. They are capital receipts because they are non-recurring in nature, because the capital which is infused in the business or the loan which the business takes is not it's not regular in nature. You does not do these things regularly in the business. So that is why it is non-recurring in nature, and they are treated as obligation of the business because at one particular time that amount has to be paid to these outsiders. So that is why they are considered as liabilities and they are shown on the liability side of the balance sheet. So this is what your capital receipts is. So example of a capital receipt is amount of loan received, amount received from sale of old assets, amount received from owner. So these are what? These are your capital receipts, examples of your capital receipts. Now let us see revenue receipts. See, it is an amount which is received from the regular transaction of a business. It is the amount received from sale of goods and services. It is a regular type of income. Revenue receipts are shown on the credit side of the trading and profit and loss accounts. So basically, it is an amount which is received from the regular transaction of business. Your regular transaction for business is basically the sale of goods and services. The sale of goods and service activity is taken by the business on a daily basis. It is the main thing through which the company receives the revenue. So this activity is considered as a regular transaction of a business. And your revenue receipts are basically regular in nature. They are recurring in nature. And they are shown on the credit side of trading and profit and loss account. So your revenue receipts, the receipts are considered here, are considered with the goods and services, that is sale of goods and services. So for example, amount received by way of discount, commission, rent, interest and dividend, amount received from sale of goods and services, etc. are termed as your revenue receipts. Okay, they are basically concerned from the sale of goods and services, or the transactions related to the sale of goods and services are termed as your revenue receipts. They does not consider the capital form. Capital is concerned with your owner's capital. They are concerned with the outsider's capital. Not revenue receipts is considered with the regular transaction of a business, that is your sale of goods and services, the activities related to the sale of goods and services. So this was all about your capital expenditure, revenue expenditure, capital receipts, and revenue receipts. I hope you have understand these terms very nicely. Till now, thank you. And if you have liked this video, like, share and subscribe to my channel, Sync. Thank you once again.